everyone, welcome back. Son of a Silver Stacker here. In today's Numismatic News and Information for the 29th day of October, 2023, I'll welcome you over to moneymetals.com so we can check out where the live spot prices ended the week and the availability and the premium for the American Silver Eagle from 2023. But before all of that, I'd ask you to like, share, and subscribe. We're trying to get to 10,000 subs. That way we can start selling merchandise with this fantastic logo here. That's the Son of a Silver Stacker logo, and it's established 2020. I do dig that. But look, imagine this on a hoodie, a t-shirt, a hat, a visor, a mug, a sticker. Yeah, you see where I'm going with this. That'll be pretty epic. Hope you're down for that. Now, don't forget like, share, and subscribe. Now let's bump over here to moneymetals.com. Looks like gold ended the week at $20.1685, silver at $23.29. And what's interesting about this is that gold is, well, I think we're almost at the all-time high at $20.75. And, that's not that much. It's like $50 away from an all-time high. And that can easily swing in one afternoon, right? But look at this, silver is $23.29. Yeah, these all-time highs for silver, we haven't seen that since the 1980s. And could you imagine what the U.S. Mint products for silver would be costing if we hit all-time highs on silver? Yowza, right? And then platinum, now that ended the week at $919.90, and palladium at $1160.25. Look at that. You're looking at an in-stock American Silver Eagle whose premium is $699. Looks like it went down again because we were at $749 yesterday, and they will buy your American Silver Eagles from you for $25.04. Now, let's head over here to the United States Mint's bullion sales. No new tale to tell here. I heard there was a video about how I guess we have the same amount of sales as we did last year for the American Silver Eagles. It's almost identical. However, I believe last year we didn't even hit 16 million, and we're at 21, almost a half million here for the year of 2023. Now, let's get to it. Let's talk about gold today. Yes, indeed. This is by Numismatic News. This is Richard Kidroich. Now, this is dated October 26th. That was just 3 days ago. Now, it says, good news. If you own gold coins, gold has rebounded to levels challenging the 2,000 per ounce mark. Yes, we've already broken through that barrier right there. Look at that American Gold Eagle. She's a beauty. Now, it says here, cash is still king. And is gold cash? Is silver cash? Well, it's not credit cards, is it? Now, it says here, despite advocates pushing for a totally cashless society, the demand for coins and banknotes appears to be on the rise. There's good reason for it. Merchants are increasingly likely to pass on banking fees from having accepted electronic or credit card payments to the customer or consumer, depending on your point of view. And let's face it, those credit card machines do charge a percentage, so the merchant actually gets paid less when you use your credit or debit card. Isn't that something? They don't really say that. And will there be a cash discount for the future? Who knows? Now, it says here, we're going to be talking cash here in a second and cash deposit at banks. All right, now it says here, according to the Federal Reserve Bank of Atlanta, between 2015 and 2022, the share of cash purchases has resulted that in consumers receiving a discount rose by 66%. So there's an incentive right there to use cash. And now here's a challenge for you. And if you can take it up if you want, don't take it up if you don't want. But there's something psychological going on when you use cash. So I would say to you, use cash. Don't use your debit card. And then if you can get cash, if your bank even has cash, and see if you're more willing to part with cash or use the debit card. And I think you actually save money when you're using cash because it hits you a little bit different. It hits you a little bit harder when you're using cash to pay for stuff. And it's just one of those things. It's the psychology of money. And that actually should be a book, I think, The Psychology of Money. Maybe I'll write that. Who knows? Now, it says here, between the 2015 and 2022, the share of cash purchases resulted in consumers receiving a discount rose by 66%. Who wouldn't want a discount? Come on. Even if it's only sales tax, right? Less than 10%. I think that's still something. It's better than nothing. It's better than a sharp stick in the eye. Now, retailers, especially small merchants, are increasingly imposing surcharges if you paid by credit card. Yowza! Cash discounts are more commonly being made available on essential rather than on discretionary transactions. There's a lot to learn here from this particular article. And could you even take up that challenge and use cash only and find out how much money you spend as opposed to a credit card or debit card in a 1 month or a 2 month period? Try that. It's a nice little experiment. Now, it says here, further good news if you hold gold coins is that gold has rebounded to levels challenging the $2,000 per ounce mark. We're already there, right? This has impacted gold American Eagles, early 20th century common date circulation strike gold coins, and many gold commemoratives. Investors are watching this market closely since much of it is upward swing is due to economic and social unrest. Now, there it is. So there's stuff going on in the Middle East right now, But if you also look at it, there's also stuff going on here in the Western countries where people are protesting left and right. It's a different world we live in right now. And let me go back to the United States Mint's bullion sales page because this is important. Now, back in March, we had the banking failures, and look at the gold eagles that were sold during that month. Yeah, tremendous. But look at that, only 900,000 American silver eagles. And I thought that was a miss by the United States Mint that, well, you could have that much sales for the gold eagle, but only 900,000 for, well, the American silver eagles. Well, that all changed this month, and the Mint has produced or sold 3,300,000 American silver eagles. Now look at this, October, it also coincides, I believe, with the ongoing unrest in the Middle East. We've sold 93,000, all right? 93,000 American gold eagles. Well, let me just go ahead and bring this to your attention because I think that this unrest that we're seeing that's driving sales for the American silver eagle and the American gold eagle is going to actually be compounded with this type of action that we saw here in March and April. And if you don't believe me, well, let's just go to the Google machine and find out. Now, I put bank deposits here, and this is a day ago, this is 3 days ago, and so on and so forth. 1 day, 15 hours, 2 days, 2 days, 1 day, 3 weeks, 2 weeks, and 4 days. Now, here we go. I'm going to start at the top here and work my way down to the bottom. It says 100 billion in deposits exit the banking system in 3 weeks as Fed survey says banks face financial stability risks. Here we go again. Same old stuff again. Now, it says here, I nearly emptied my bank account. I don't know what's going on there. Why would you do that? Let's see. Top CD rates today, 6.5% for smaller deposits, 6% for larger deposits. Yes, there you go. Look at that. They want smaller deposits? I don't even know. Now, it says here, this is from Benzinga. U.S. banks witness whopping $100 billion deposit drop in just 3 weeks. Fed survey raises alarm. Yep, the Fed's raising the alarm on bank deposits. And when there's, well, less deposits, there's less cash, right? First Citizens deposit beat estimates as SVB deal boosts income. That's amazing. Don't know that's kind of counterintuitive. First Citizen reports strong third quarter growth led by deposit growth. There you go. Using a banking as a service to goose deposits isn't foolproof. And it says here 260 billion in deposits exits JP Morgan, Bank of America, Wells Fargo, and Citi in 1 year. That's by S&P Global also. That's amazing. So if all these deposits are leaving the bank, what does that mean for the stability of the banks? So it could mean that we are going to be entering that period that we saw in March and April of 2023. And now you combine that with the geopolitical risk that we're seeing right now. And what do you think that's going to do to the price of gold and or silver? Yeah, me too. I think so as well. Now let's get over here to the Daily Hodl. I think that's how you say it. It's news and insight for the digital economy. And this is by Henry Canapi. And it's dated October 27th. That was just 2 days ago now. And it says 100 billion in deposits exit U.S. banking system in 3 weeks as Fed survey says banks face financial stability risks. It's not over, folks. It is far from over. And they got all this. They got this picture here with these Roman columns, Greek statues, whatever they are, and money's just flying around everywhere. And I don't even know what the pink pile is in the middle there. That's trippy. Now it says here people and businesses are withdrawing billions of dollars in deposits from U.S. banks as a new survey details concern on the state of the financial sector. What? Yeah, what is right? The latest numbers from the Federal Reserve economic data, that's Fred system, show that deposits in all U.S. commercial banks suffered $100 billion decline in just 3 weeks. They got to quantify that there. That's amazing. Now, from $17.38 trillion in September 27th down to $17.28 trillion in October. And I think it's not necessarily the numbers, it's the trajectory, right? Is it up to the right? Is it down to the right? The deposit fight continues amid a new survey from Federal Reserve that polls 25 participants, including market professionals, academics, investment funds, and research advisory firms. The participants say that while the sector may have withstood financial tremors early this year, you know what I'm talking about, back in March, yeah, banks are still at risk of another crisis for 2 key reasons. And here we go. This is the writing on the wall. Although survey responders noted that banking sector has stabilized since a period of acute stress earlier this year, you know, the banking crisis back in March and April. I don't know why they don't say that. Many highlighted risks of renewed deposit outflows given that large proportions of deposits remain uninsured. Whoopsies. Yeah, imagine if your money's uninsured, you'll take it out of there in a heartbeat, right? Yeah, I think so. Many respondents continued to link risks of re-emerging banking sector stress to potential losses on commercial real estate. And folks, you know, how many of these, okay, so commercial real estate has a lot longer lease period than homes do. Like we're talking 10 years, 15 years, 20 years, whatever. Imagine if you have a high-rise building and you lease out the top 5 floors of a building, you got a lot of money, and now that COVID pandemic hits, right? And you say to your people, you know what? Work from home. Now that commercial building is empty, or maybe one floor is being used, but the other four floors are empty. Well, what does that do? That makes you go, gosh, I'm spending all this money on this lease for a building I'm not even using. Yeah, whoops. So in order to save money in this financially trying period that we're entering or in already, they're going to cut their losses. And we're going to see commercial real estate, and we've already seen segments of it already not too healthy. It's going to make it even more unhealthy. Now it says here commercial real estate exposures, particularly among smaller and regional banks. Yeah, here we go. Participants also view the commercial real estate sector as a potential trigger for systemic stress. Yeah. What they're saying is it's the domino effect, right? That's a domino. One goes and they're all going to go. Amid higher interest rates and declining demand for office space due to the shift to a hybrid work. I just said that. See? Telling you, survey respondents viewed small and regional domestic banks as particularly vulnerable due to the high concentration of CRE exposures. That's commercial real estate, which could lead to tighter bank lending conditions if they're not already. Isn't that something, folks? So what do you think? It's a pretty amazing picture for what? Yeah, gold and silver and other precious metals. And like I said, it's kind of amazing that silver, well, we haven't seen these tremendous levels yet on silver that I think we're going to be seeing. I think it's still pretty reasonably priced. But gold, look at that. We're about $50 from all-time high. And yeah, you can talk about inflation and the value of the dollar, but think about this. The dollar's been pretty strong here in the last couple days, maybe the last week. And yeah, they may be propping it up. But look at gold. You know, usually when dollar goes up, gold goes down. But this has not been the case this month. It's very interesting to see all this transpire. Now, over here to the plus ones. Bam! This is Proverb 4:23. And it says here, more than you guard anything, safeguard your heart, for from it are the sources of life. You don't believe me? Well, check this out, because this makes total sense, right? More than anything, a person must guard their heart, which is pivotal in focusing thoughts and desires away from the negative and towards the positive. Let's say you're a little bitter in your heart. That little bitter heart is going to make those words come out a little salty. Salty. Yeah, the head, the tongue, and the heart. The words we utter come from our brains, yeah? But before we can speak those words from our mouths, our heart has a say in it first. And then it goes to our mouth. Now, is our heart happy, sad, or angry? And doesn't that impact our speech? Because, yeah, it sure does. Now, let's get over here to 99.939's Fine, KOIN, Coin News Radio. This is the Beatles. Yeah, and this is Come Together. Now, I mean that more than one way. Come together, right? You know what I'm talking about. Yeah, it's pretty awesome like that. So there it is, folks. I want to thank you all for dropping by. Thanks for hanging out with me this long. I do appreciate you checking out those plus ones. Don't forget to like, share, and subscribe. We're trying to get to 10,000 subs so we can sell this fantastic merchandise that I have in mind with this logo right here. And I'll get some other logos made up as well. But this one is the OG. Stacker out.